Damn. Yeah.
What's going on, everyone? Two Brothers Mining here, back with another nope, not a daily crypto news recap. Let's call it a midweek crypto news recap. Hope your guys' week is going great. Let's dive right in. So yesterday, Axie Infinity's Ronin network suffered a $625 million exploit. It's the latest hack and maybe the largest. And I think it technically is the largest. So the gaming-focused Ronin network announced Tuesday a loss of over $625 million in USDC and Ethereum. According to the blog post published by Ronin Network's official Substack, the exploit affected Ronin validator nodes for Sky Mavic, the publishers of the popular Axie Infinity game, and the Axie DAO. So the attacker used hacked private keys in order to forge fake withdrawals from the Ronin bridge across two transactions. The blog post tagged the losses at 173,600 Ether and 25.5 million USDC. Insane. How these backdoor ways are still being discovered is insane. I mean, there's no other way to put it. You would think by now things like this would be so thoroughly tested when you're talking about hundreds of millions of dollars that it shouldn't be possible, but here we are. So some of the biggest crypto hacks to date, aside from Axie Infinity or the Ronin network's 625 million, Poly Network in August of last year, hackers stole 610 million. And Polygon is a layer 2 Ethereum blockchain. But most of those funds were returned to Polygon, which is, I wish I knew more about that because that's also very strange. In January 2018, hackers stole cryptocurrency then worth around 530 million from Tokyo-based exchange CoinCheck. So in today's money, I'm guessing that 530 million is much larger. 2018, I mean, yeah, it was in the height of that bull run, but not anywhere near to what it is today. The thieves attacked one of CoinCheck's hot wallets and drained it. So also wild. Then in 2014, Mt. Gox was hacked, and for Bitcoin worth close to 500 million. And at the time, Mt. Gox was the world's largest Bitcoin trader, and handled roughly 80% of the world's Bitcoin. They filed for bankruptcy right after the hack. And then just last month, Wormhole was hit for 320 million, and they made off with close to 120,000 Ethereum. Wormhole at that time was just recently acquired by Jump Trading, which is a Chicago-based firm, and Jump Trading made everyone whole, put 120,000 Ethereum back into Wormhole, and made sure that the community members were made right, which, hats off to them. That's a rough decision to make. Just acquire this company, things don't go well, but you back them up, and more importantly, you back the community. who makes your company. So my hat's off to them for that. State regulators crack down on Voyager Digital's crypto interest offer. So the coordinated legal push resembles BlockFi's legal battle, which ended with $100 million in fines and pledges to register as a security. So Voyager is getting scrutinized by quite a few states: New Jersey, Alabama, Oklahoma, Texas, Kentucky, Vermont, and Washington. And they believe Voyager Digital's Earn program may be unregistered securities, similar to what BlockFi went through with their Earn program. But I don't see what the difference is, because if you go onto, say, like crypto.com, right, you got an account there, you can stake coins, earn interest on those too. So why aren't they in the spotlight also? It seems like they're just kind of picking and choosing who they want to go after, uh, and with no real reason why. Voyager Digital claims that they're in the right, that they're not doing anything wrong, and are willing to, fight for that. So we'll just have to see how that turns out. Um, keep you guys updated on it. And here's a big one. So MetaMask allows iPhone users to buy crypto with Apple Pay. On March 29th, MetaMask announced a raft of updates to its mobile version 4.3.1. The most significant was the Apple Pay integration. The catch is that Apple does not directly support crypto payments through its own platform, so it has to be done via Wire, which does support crypto and integrates with Apple Pay. Users can now also buy crypto with debit and credit cards, eliminating the need to send ETH to the app in advance. Apple Pay users can deposit a daily maximum of $400 into their wallet using their Visa or MasterCards and the Wire API. Crazy. I mean, we're just waiting for this to happen, right? Another big company getting in to basically, open up adoption. And it's going to get even bigger than this. I mean, more companies are going to start to onboard. I mean, pretty soon you're going to see Apple being able to handle crypto transactions, in my opinion, at least. So you won't even have to go through this Wire API to get buy crypto directly on MetaMask. It's just wild to see how far it's come in, even the past year. So using MetaMask on layer 1 does also incur gas fees. If you've been in crypto, you know this. Anything you want to do with crypto is going to cost you gas. However, even though the firm says it does not profit from them, MetaMask also has its own fee, which is 0.875% of the transaction. Also, really not unheard of. Any sort of OnRamp is going to have their own fee associated with it. That's how they can basically support being a company. I mean, you got to make money somehow. Providing a free wallet is just that. It's free. They're not making any money. So that's their way, I guess, of generating income. To be honest, it's not a huge, at least, again, in my opinion. So this one's kind of interesting. How a post-merge Ethereum could attract institutional investment. And in my opinion, it doesn't have to wait to post-merge. I think a lot of institutional investment is starting to get involved, especially in Ethereum and Bitcoin. But Ethereum staking derivatives offer many of the qualities institutions look for in investment. So to skip a lot of this and dive right into it, currently staked ETH is already a widely popular investment among crypto traders and investors, even though those deposits are illiquid and impossible to trade until sometime after the merge takes place. Liquid staking solutions, services that offer users a tradable token representing those deposits in the ETH 2.0 staking contract, currently account for roughly 20 billion in deposits, almost 10% of all of DeFi's total value. And this is super interesting, and I kind of want to look into this a little bit. Where is it? So basically, Curve's single largest pool is STETH with 4.91 billion. Aave is another main destination with 1.63 billion. One popular strategy is when a user deposits their ETH into the Ethereum staking contract through Lido and receives STETH, then supplies their STETH as collateral to borrow more ETH against it and restakes that borrowed ETH for STETH. The user can repeat this process multiple times over, in large part because the interest gained by staking is much higher than the borrowing rates across DeFi lending platforms. For instance, the APR for staking ETH is approximately 4% right now, while ETH's variable interest rate for borrowing is 2.33% on Aave's lending platform, allowing them to create a leveraged yield position. Kind of interesting, or not kind of, definitely interesting. Basically, depending on the price of ETH, but that shouldn't matter too much because it's in ETH and lent in ETH that you're essentially going to make 1.67% for basically nothing. Now, I do want to dive a little bit more into it and figure that out a little bit more. Definitely very interesting. So a popular talking point among Ethereum's maximalists is the triple halving, which essentially is the inflation rate of Ethereum is going to drop massively, meaning once it goes to proof of stake, it'll no longer be producing 2 Ethereum per block, which will roughly drop from 12,000 Ethereum a day to just under 1,300 ETH a day. And then that combined with EIP 1559, which was introduced last year, which burns gas, it could make for Ethereum to be pretty sparse. And essentially it's equivalent to 3 Bitcoin halving at once, or so the argument goes. And the article is very interesting. I'm not going to go much more into it. It does provide a little bit more information about staking if you're into it and whatnot. So I'll leave this in the description below. And then a quick look at the market. Looks mostly green. I mean, nothing crazy up or crazy down. I know Zilliqa made some nice gains here, not just today, but the past few days here. Yeah, this is crazy. 103%. That is awesome. I don't personally own any of it, but if you do, congratulations. That's incredible. Bitcoin just barely down. Ethereum barely up. And Solana jumped quite a bit, and so did Aave. That's nice to see. That's yeah, pretty green market. Green market's a good market. But I hope you guys enjoyed this. I'll be back Friday with another let's call it tri-weekly crypto recap. If you like this, hit that thumbs up and subscribe. I'd really appreciate it. And I'll see you guys Friday. Stay safe. Stay tuned.
Bye.